Closing costs. If you're looking to buy a home, you've probably heard that term thrown around a lot. But what are they? How can you bring these costs down? That's what we're going to get into today. I'm going to share some practical tips and strategies to help you reduce your closing costs so you're not stuck paying more than you need to. If you're new here, I'm Courtney Thornell, a mortgage loan officer. All right, let's start by talking about what closing costs actually are. A lot of people are surprised when they realize that in addition to their down payment, they also have to come up with closing costs to finalize the purchase of their home. Closing costs are fees that go to different parties involved in the purchase transaction, like your lender, title company, escrow company or attorney, and your local government. And they can include things like loan origination fees, underwriting fees, appraisal costs, title insurance, transfer taxes, and so on and so on. Now, closing costs can vary widely, and I have another video where I cover what they are and how they can vary, so feel free to check that one out. But on average, closing costs range from about 2 to 5% of the home's purchase price. That's quite a bit of money to have to set aside. There are ways to reduce these costs though, and I'm going to go over a few of those options. One way you can reduce your closing costs is by opting out of escrow impounds. Usually when you get a mortgage, your lender sets up an escrow account where you'll pay property taxes and homeowner's insurance as part of your monthly mortgage payment rather than one lump sum come renewal time for your homeowner's insurance or come time to pay property taxes. By paying it monthly with your mortgage payments, it is pretty convenient, and the lender makes sure the payment gets made to the government or insurance agency when the time comes. Now, at closing, you will have to pay for your first year of insurance up front, regardless, but to establish an escrow or impound account, the lender will typically require several months of taxes and insurance up front. So for sake of ease, let's say that your homeowner's insurance premium is $1,200 for the year. That averages to $100 a month. And let's say your property taxes are $6,000 for the year. That averages to $500 per month. If the lender requires 3 months worth of insurance and taxes to establish your impound account, that's $300 for homeowner's insurance and $1,500 for taxes that will need to be collected at closing. That totals $1,800. If you're tight on cash to close, some programs allow you to waive impounds, so that's $1,800 you can save on closing costs. You'll still need to pay that money, but just not at closing. Now, though, it's your responsibility to make sure they get paid accordingly. Another smart move is shopping around for homeowners insurance. A lot of buyers just go with the first insurance quote they get, but that can mean missing out on better deals. By comparing a few different policies, you might find one that offers good coverage at a lower premium. Lower premiums mean lower upfront costs at closing since you do have to pay for the entire year upfront. Just make sure you're not cutting coverage just to save a few bucks. You want to make sure your home is fully protected, but with a little bit of research, you can often find a policy that has the right balance between coverage and costs. All right, so here's a trade-off that can work for some buyers. Agreeing to a slightly higher interest rate in exchange for a lender credit toward your closing costs. Basically, instead of paying points to get a lower rate, this is the opposite. The lender gives you money to cover those upfront fees, but you have a higher rate, therefore a higher monthly payment as a result. This can be a good option though if you're tight on cash right now, but can handle a higher payment over time. For example, it might cost you $100 more per month for a higher rate, but you might get a credit of $2,000 to $3,000 towards closing costs. It's all about finding what works best for your situation. Talk to your lender because they can give you options at various rates and credits to see what makes the most sense for you. Okay, now let's talk about seller concessions. This is when the seller agrees to cover part or all of your closing costs depending on the market, and sellers might be willing to help you out, especially if their home has been on the market for a while or if they're eager to close the deal. But keep in mind, this is something you'll have to negotiate, and in a competitive market, it might not always be an option. Now, you can either ask for a percentage, such as 3% towards closing costs, or you can ask for a flat amount, such as $10,000. And seller concessions can go towards closing costs and or they can be combined with paying down your interest rate. Asking for seller concessions can save you thousands of dollars, but again, it's all about knowing when you've got some room to negotiate. Okay, here's a strategy you can use if the seller doesn't want to cave on giving seller concessions, but you need them to be able to purchase the home. If the property you're buying can appraise for a higher value, you could increase your offer price slightly and ask the seller to credit that extra amount towards your closing costs. So let's say the property is selling for $400,000 and you need $10,000 towards closing costs. You can offer $410,000 for the property and ask for a credit of $10,000 towards closing costs. That way you're not paying anything more out of pocket and the seller still walks away with the same net amount. Again, the property has to appraise for the $410,000 and you still have to make sure you're pre-approved for the higher $410,000 amount. But it's something worth exploring if you need the concessions and still want to make a strong offer. When you're buying a home, it's easy to get caught up in the excitement. But if you plan ahead for these costs, it can really take the pressure off. Remember, you don't have to accept the first numbers you see, whether it's shopping around for insurance or working with your lender on rate options. There are ways to reduce those upfront costs and make the home buying process more affordable. If you're feeling unsure about any of these strategies, give me a call and we can work to find a solution that fits your needs. Sometimes a quick conversation can save you a lot of money and a lot of stress down the road. All right, thank you so much for watching. If you found this video helpful, hit the like button and subscribe to my channel for more tips on making the most of your home buying process. And if you're ready to start looking for a home and looking into what options are available to you, please feel free to reach out and I'm more than happy to help find the best plan for your budget. Drop a comment below with any questions and I'll see you next week.